Welcome to a very special edition of The Bank Tellers, where we dive into the intersection of TradFi and DeFi, a major topic we'll be exploring more at Worldpay USA. And today we are joined by Nabil Manji, Senior Vice President of Fintech Growth and Financial Partnerships at Worldpay. Actually, very recently, Nabil was responsible for breaking my LinkedIn algorithm when Worldpay and BVNK announced a unique partnership to bring stablecoin payouts to Worldpay's merchants. So delighted to have Nabil joining us today. Nabil, how are you doing?
I'm good, thanks. Mickey, really excited to be here with you. And I apologize for breaking your LinkedIn. It wasn't my intention.
Yeah, no, I mean, I'm glad to have you here. It was that was such a unique moment in the lead up to Money 2020 Europe, where I know yourself and your partners at BVNK also did a really awesome deep dive into that partnership. But yeah, it was huge, huh?
Yeah, I think the release was definitely well received and probably more widely spread than we anticipated. And I think to your point, the timing, I think it was a week or two before Money. It could have been better because it helped generate, quite a bit of buzz and a lot of meetings and inbound interest during that conference, which is always great. Kept us busy.
Yeah, I'm glad to hear it. So actually, let's just get right into it, right? Because let's start with the flip side of it. In terms of you guys have obviously, like you just said, done an incredible job of bringing that partnership to life with BVNK, who are a really big stablecoin player in the space. On the flip side of it, what is your strategy for engaging with the traditional financial services institutions and that space?
Yeah, so I would say, generally we're quite a product and client-led organization. So, we constantly solicit feedback from our clients and our partners and our internal teams, and that helps us define our strategy, at a high level in terms of what products and services do we want to build or enhance, what markets do we want to enter, where should we be, changing the way we do business. And so all of that feeds into what I would call our general business and product strategy. And then we think about interacting with traditional financial service institutions as it relates to our ability to deliver those products and services and that strategy. So, for example, if one of our strategy ambitions was to enter a new geography, we would, of course, need to find a number of different traditional financial institutions, specifically a bank or two, to work within that market. And so our strategy for how we do that would be defined, by our priority to go to market. So I would say it's really kind of that traditional client and product driven lens. And then that filters down into a set of requirements. And one of those requirements as a financial services business is to work with other financial services partners, such as banks, to bring those products and services to market. That's kind of the main one. I would say, other than new products or services, we constantly evaluate where do we need more redundancy, where do we think we can be more cost efficient or more time efficient. So you could call that like service enhancements or redundancy enhancements and things like that that can also play into us engaging with further with our existing financial institution partners or potentially with new ones as well.
Got you. It sounds like there is a kind of a very clear approach to how you do it, right? Like, so it's probably the kind of product first, and then identifying the right partners as a result of that.
Yeah, I think it's like fairly clear. It's never perfect, like with any company. Sometimes we pivot directions and change strategy here and there. But I think like at a high level, that's how it works. We'll get a requirement from our product team, our business team, our client, and then to the extent that that requirement requires a new financial institution relationship or deepening an existing one or changing an existing one or whatever it might be, then it'll kind of feed in that way.
It's interesting to me, obviously, that you said, despite the kind of high level clarity, obviously, it doesn't always play out. So maybe I want to kind of talk a bit about that, right? What's the kind of biggest challenge you've experienced when it comes to, building partnerships with the kind of TradFi players?
Sure. And before I answer that, actually, I like the way you said that, it doesn't always play out. I think one of the reasons for that is payments and fintech is just so fast evolving, right? You might set a 3-year strategy, but then get 1 year into it and then realize the whole market's changed or there's a new technology out there or some regulation has changed or whatever, right? So I think like, yes, we try to set that strategy and that set of priorities. But like other companies, we're constantly evaluating whether that's the right thing in light of new information. So yeah, that's why it can change or pivot. And then I would say like in terms of challenges when engaging with traditional financial institutions, I wouldn't say there's one big one that dwarfs everything else. I think it again depends on the partner, depends on the use case, but you know, when you work with banks, some of them are big and complex and kind of slow to deal with. That's not a surprise to anybody, and it's not a surprise to them. And I don't think they'll be offended that I said that. So I think, like, if you're a faster moving fintech or payments company, sometimes adjusting to the pace of traditional financial institutions, which tend to be a little bit slower in many cases. That could be a challenge depending on your timelines and requirements. I think you might find others, though, that are fast and nimble and newer, but maybe they don't have the scale or the balance sheet or the geographic coverage of some of those larger, more complex players. So it's like a double-edged sword in some sense where, okay, they can meet my speed timeline, but then maybe they don't meet my other requirements. So it presents other challenges. And then I think, with a lot of larger fintechs like Worldpay, we do a lot. Of course, we help companies accept payments, make payments, manage payments, think about fraud and risk management, reporting and reconciliation, local payments, international payments, foreign exchange. There's so much that we do. And one of the challenges we run into is we can find a great financial institution partner, maybe for product A and B or in geography C and D, but then they can't support us on products X and Y or in geographies Z and D or whatever, right? So it's like you never have this like one partner that's going to be great. And so part of the challenge is not in and of the partners themselves, but it's finding the right mix of partners that complement each other, work well together, meet all your requirements, can deliver on a cohesive timeline, all that sort of stuff. So I think like that can be a challenge, especially if you're, relatively large and have a number of different product lines that you're trying to service. And then finally, it's also no surprise that some of the technology that some of the traditional financial institutions use in many cases is decades old. And in a lot of markets, particularly in the Western world, there's been a lot of consolidation among banks, particularly in the 80s, 90s, and early 2000s. And so sometimes you don't have, even though you might have a partner that is available in all the geographies you want, can offer you a lot of the services you want, can move in a reasonable timeline, they might not have the best technology that you want to consume. So I think those are some of the challenges. I wouldn't say there's one that's bigger than the other. It just depends on what you're trying to accomplish and where and in what time frame.
Yeah, I mean that makes a lot of sense. Like as you're kind of explaining that to me, the big picture thing I'm taking away is that there's always opportunity cost, right? Like if one of your partners has
Exactly.
solution, the
Yeah.
maybe the pace is not the same.
Yeah.
But equally, I guess that's also where the opportunity lies too, right? Like it's a double-edged sword because yeah, that's where the issues or the challenges to be resolved and the opportunities as a result lie.
Yeah. And that's where some of the value that fintechs and payment, like non-bank financial institution companies like WorldPay bring, right? Like we can abstract away some of that complexity and some of those challenges for the end user or the end client. So that's part of the value we bring is actually dealing with those challenges that some of those partners can have.
Yeah, that makes complete sense. And I guess one thing that's interesting is over the last, if you kind of go on LinkedIn, like I said, over the last year or so, right, like it's very clear that it feels like the pace of innovation continues to accelerate in financial services, especially within
Yeah.
TradFi. What we've seen with the stablecoin, which I'm trying to personally label hot stablecoin summer. I'm not sure it's taking off just yet is like it's starting to really get embedded into that traditional financial services infrastructure. But from your perspective, given that just the vast geographies you operate in, given the kind of vast number of potential partners you work with and interact with, especially in TradFi, what's the biggest misconception you're seeing in that space when it comes to things like digital assets?
Yeah, I would say it's changed over the last few years and even more so maybe the last like 6 to 12 months. If you'd asked me this question probably 2, 3 years ago, I think the general misconception from people in kind of TradFi about the digital asset space was that they're all a bunch of risk junkies and they don't care about regulation and rules. But I think the current environment has shown that that's clearly not the case. I mean, the amount of money and time that the industry is investing in helping policymakers establish clear rules and regulatory frameworks is inordinate. Like it's a very significant investment. And I think you're seeing that start to play out around the world. And I think also a lot of those more risk prone or regulatory intolerant players have been weeded out over the past few years. And so I think that misconception might still remain, but I think those that are in the industry today and interacting with the industry today know that it's probably a pretty outdated misconception at this point. And I think the second one is if you go back to the ethos of crypto back when Bitcoin started and stuff, it was all about disrupting the traditional financial institutions and ecosystem and was kind of like a philosophical or political movement against big banks and stuff like that. I don't think today most people in the crypto ecosystem really identify with that. It's not about like flipping the system on its head and disrupting and replacing everything. It's more about like how can the technology and the companies improve certain elements of our lives as it relates to financial services. So whether it's things like tokenizing different assets or using stable coins to make cross-border payments more efficient and more quick, I think it's more about like what are those pockets of opportunity for the technology to again make things more efficient, more quick, more affordable, whatever, rather than like us versus them mindset.
Yeah, I think that's so interesting. And I think that's, it kind of tracks a little bit, not to that same extent, right, with fintech too, in terms of like 10, 15 years ago, like fintech was disrupting and to replace traditional
Yeah,
banking. And now it's like actually really the value a lot of folks and the industry seems to be focused on is actually the collaborative approach. And I think
for
you
sure.
sense that with the digital asset space too. It's interesting that you said, if I asked you that question a couple of years ago, right, that, probably your answer would be different. So let me ask you a forward looking question in a
Okay.
different way then. Let's say in 5 years' time, what do you think this intersection of TradFi and DeFi or digital assets is going to look like?
Yeah, so I would say there's three things that I think are going to be fairly commonplace or at least like more widely accepted in 5 years from now. So, one is around this concept of tokenization. I think with the amount of investment and interest that's going into the tokenization of different investment assets, potentially tokenized deposits, and maybe even some physical assets, I think we're going to see a lot more deployment or usage of tokenized assets. For example, I think Robinhood's announcement a couple weeks ago was super interesting, and obviously a lot of people are paying attention to that. So that's one that I think is definitely going to be, prevalent in the next 5 years. Second is I think stablecoins are going to continue to grow. I think there needs to be probably some tempering of the expectations there, but I think generally the trajectory over the next 5 years for stablecoins is positive, and they're going to find a nice set of use cases and set of problems that they're solving in the payments ecosystem, whether it's for B2B payments, C2B payments, B2C payments, or even internal treasury management. So I think stable coins across that are going to continue to see some growth. And then finally, I think we're going to get to a place where there's like some form of digital asset, whether it's Bitcoin or other, in like everybody's investment portfolio. I think the degree to which, not only things like Bitcoin ETFs are proliferating, but even some of the guidance in various developed markets around retirement accounts being able to hold private assets or being able to hold crypto, or the number of public companies that are starting to like hold Bitcoin or other digital assets in their treasury. I think in some form or fashion, almost everybody's going to have exposure to digital assets in their investment portfolio in 5 years from now. So those are kind of the three things that I'm tracking and think will continue to grow.
Yeah, I think in all of those instances too, right, we're kind of seeing a lot of those things starting to happen. I think the tokenization piece is really interesting with some of the announcements we saw from JPM,
Yeah.
for instance, around like their own token and the potential opening up the kind of corridor for tokenized deposits.
Hmm.
At the start of our conversation today, we touched on like what you guys at Worldpay and the partnership with BVNK that was really significant, right, in terms of bringing out stablecoin payouts to merchants globally. Outside of that specific use case and partnership, how seriously is Worldpay as a business thinking about digital assets, and how much does that? How do you view the role of digital assets for the future of Worldpay as a
I mean, look, we take the space seriously. If you've been following WorldPay, you'll know that we've been in the digital asset space in some form or fashion for almost 10 years. We started as one of the first major international payment providers to provide services to the digital asset space. So we've been providing services to clients in and around the ecosystem for 10 years. We also started using stable coins as a form of settlement currency for our own operations in 2022. It sounds kind of funny because 2022 wasn't that long ago. It's like 3 years, but in the world of stable coins and payments, that's like pretty long. way before most were doing it. And then, as you mentioned, we've announced this new partnership and product with BVNK and Fireblocks around the stablecoin payout side. So we're adding stablecoins to another one of our big product technology stacks, which is our payout stack. And so, you know, we're in the space. We have been longer than almost any other payments company. We continue to be in the space. I think, like I spoke about at the beginning, we're very client and commercial driven in terms of our demand and our roadmap. And so as the space evolves, we'll continue to keep an eye on, what are those other use cases or products that we need to be thinking about and bringing to market to stay ahead of the game and meet our clients' requirements. I think one space I'm quite interested on and our internal teams are taking a look at is how we as a company use stable coins and blockchain to enhance our own money management capability. So things like moving money around the world more quickly and more cheaply, 24/7 availability, so that we can make sure that we have liquidity and money when and where we need it in the most efficient manner. So not like an external facing solution, but something that can actually make us better overall across a multiple areas of our business.
I think that's such an interesting approach to it too, right? Like it's probably kind of it gives you some advantage of knowing how where the problems lie, where the kind of value add lies, and potentially a way to kind of test out potential new products and ideas with respect to digital assets before you roll them out. Given
Yeah, I think like just on that, one of the things that's nice about being a bigger company, despite some of the complexity and challenges, that we spoke about earlier, is you can place bets, right? Like we don't need to bet the whole company on one thing. We can say like, hey, we're gonna launch a product with a partner and give it a try and see what our clients think, see if they're interested, see what the economics look like, see if it's adding value. And not every bet wins, but it's nice to have the ability to place a few of them here and there.
Yeah, absolutely. On that point, right? You guys have been doing this for a really long time, 10 years plus, and you've built partnerships. You've been finding use cases for your customers, but also internally too. So you've kind of really seen a really broad kind of gambit around like the integration of digital assets. From what you've seen over that period of time, what's the biggest challenge when it comes to integrating or even experimenting with digital assets internally?
Yeah, so I will borrow some phrasing from one of my previous answers. I think if you had asked me this question historically, I would have said it had a lot to do with challenges around the legal and compliance and regulatory side, whereby, the environment was, I would say, quite challenging a few years ago on the regulatory front for digital asset companies and digital asset use cases and currencies. Now I think we're in a better place. We're not in a perfect place, but there are relatively clear frameworks in many developed markets and or relatively clear frameworks that are progressing in many developed markets. So I think the regulatory side is, I wouldn't say not a challenge, but it's a solvable challenge and a knowable challenge, and one that as a regulated financial institution, we know how to deal with if and when we want to. So that is a big piece, but I think is better now than it was a few years ago. And I think now it's more about technological and operational integration. So like I'll give you a funny example. How do you integrate a crypto wallet with an enterprise grade treasury management system to get your reporting and reconciliation and balance information? Okay, then if you can get it, how do you think about decimal places? Traditional fiat currencies and treasury management systems have two, maybe three decimal places. Bitcoin has like what, 8, 12 more? I don't know. So there's a whole bunch of like, I would say nitty gritty details, which is where the rubber always hits the road in fintech around how do you take this new technology and some of the nuances associated with it and integrate that into your existing technological infrastructure and your operational processes and procedures and do it in a way that still gives your clients the safety, security, reliability that they expect of a large enterprise, highly regulated financial institution like WorldPay. So it's not like one particular challenge they're in, but I just think that broader bucket of how do you like merge the technology and operations of digital assets with quote unquote traditional fiat assets and deliver it in a seamless, scalable, safe way.
Yeah, I think that's so interesting, right? Because I think there is a kind of it's often you kind of the conversation around technology adoption and financial services sometimes can be very one-sided around like the value
Mm,
of the new technology, but a big part of that is how that technology can be integrated into a system in a way that, all the kind of market participants feel comfortable and safe to actually deploy it, right? Like to your point around the
Yeah.
regulatory clarity, the reporting side of things, and just, the like the ability to have like checks and balances in place that like the traditional system, for different reasons and over time has managed to establish. That takes some time to kind of ramp up for this side too, right?
Yeah, I think like if you think about various industries, there are a few of them where trust is absolutely paramount. And, healthcare and medicine as an example, transportation as another example. I think financial services is right up there where, you can have the latest and greatest product, but if it isn't safe or it isn't scalable or it isn't secure, like, and your customers don't trust you because of that, it doesn't really matter how good your product or service is without those things.
Yeah, absolutely. And I think probably, financial services is maybe the most unique one, right? Because of like the scale at which it happens, right? Like all of us touch financial services multiple
Yeah.
times a day, every single day. And of course, trust is, you know, incredibly important in medicine and healthcare, but
Yeah.
touch point is much less frequent relative to like
True. Yeah, yeah, yeah. Fair
banking, that
enough.
kind of stuff, right? So I think that's such a good.
Yeah. I like to think of it as like if it's working, our customers shouldn't really be thinking about it. Like if you're constantly thinking, is my payment service provider gonna process this transaction appropriately or correctly? Like we're not doing our job. You should like never be thinking about it. The
Yeah.
only time you should ever be thinking about it is if something has gone wrong. And then if something's gone wrong or something's happened, hopefully the time period in which you're thinking about it is incredibly short because we would have solved it, incredibly quickly.
Such a unique challenge when you put it that way, right? Like the kind of like doing your job well in this kind of context actually means to not be seen, to not be thought of, right? Like to just be
Yes.
as invisible as possible, which is
Like honestly, the less my clients think about me, the better.
yeah, yeah,
Because that means they're not worried about anything.
that makes. I mean, I think that's a really good heuristic for kind of thinking about what this kind of space requires and what the work is involved is. We already touched on it a little bit, right? Like in terms of, again, go on LinkedIn or like, and I know even just a couple of days ago we had the kind of Genius Act passing in the US. So there is lots of, excitement around it, but there is a sense that maybe parts of it are a little hot right now, maybe dare I say overhyped. From your perspective, right? What's the kind of one or two digital asset trends that you think are certainly overhyped right now, at least in the short term, and one where maybe not enough attention is actually being focused on? Is there any you can think of?
Okay, so I have some funny comments on this. One is, I think if AI and Gen AI have done any favor to the crypto industry, it's they've created a hype bubble to which nothing in payments or fintech or crypto can ever compare. So if that's the benchmark, then nothing in crypto or stable coins or payments is overhyped. So thank you to all the people working in the AI space. On a more serious note, I have a lot of friends that work in the stablecoin space, so I'm going to be delicate with my words. Stablecoins is very hyped. I don't know if I would say overhyped
Yeah,
just to avoid upsetting my friends. Look, stablecoins are in the news a lot. There's a lot going on the regulatory front, as you mentioned. There's an absolute mountain of VC money that's pouring into the space. And I think that's great. Look, payments is a massive market. There are a lot of opportunities to do things better. There are a lot of different payment rails that can coexist. But I do think some of the hype and the excitement that's going around stable coins is probably a little bit overheated at the moment. But on the flip side, I think the fact that it's getting so much time in the spotlight and so much investment is good because it's going to allow the participants in the market to sort through the noise and get to the signal and the actual value maybe more quickly than it would have otherwise if it wasn't getting so much attention. So I think it's again, a bit of a double-edged sword. So I'm excited to see that evolve. I think a closely related topic that's not getting as much attention because stablecoins have stolen the limelight is actually tokenized deposits. If you listen to like what the Bank of England and the BIS and other major kind of monetary authorities and regulators are saying, they love all the benefits that stablecoins can provide, i.e. 24/7, 365 availability, instantaneous settlement and finality, transparency, but they also don't like some of the facts that it introduces systemic risks in certain ways. Also, most stablecoin issuers around the world cannot lend, so it slows down the velocity of money, which has implications on GDP growth. So I think a lot of the policymakers and regulators in the space are thinking about how can we deliver the benefits that the market clearly wants from stablecoins, but do it in a way that is a little bit less risky and a little bit less, call it punitive to GDP growth at scale. And tokenized deposits is the answer that those folks seem to be converging around. And so I think it's a very interesting topic. It's going to take longer to evolve because it's got a much larger number of participants, is already a very tightly regulated and monitored area of the financial ecosystem. But if and when that is unlocked, I think it could have major scale implications very quickly because of the amount of just regular deposits that could be tokenized and then quote unquote unlocked on a relatively quick timescale. So yeah, that's a topic that I'm excited to see evolve, as I think it kind of brings the best of both worlds from like a traditional bank deposit combined with stable coin benefits.
Yeah, I think that's a. I definitely think the kind of noise around the tokenized deposits has not been anywhere near what we're seeing with stablecoins, but kind of relative to the potential scale that could be achieved as a result of that when you have like some of the big T1 banks in particular getting involved
Exactly.
is
Yeah.
is, is
Yeah.
an order of magnitude greater, right, in many instances.
Yeah. Exactly.
On the kind of specifics of around stable coins, when it comes to use cases, is there any that that you're seeing that are not yet kind of getting that same level of attention in terms of I know that stable coins, for instance, off ramping from digital assets has probably been like the biggest kind of use case. And then for like a lot of players in the industry, I think we touched on AI, right? The AI piece was interesting because AI is kind of built or AI based companies with AI products are pretty global in nature from day one, and so that, like contractors etc paying them out in having that kind of ability to do so in a really neat and efficient way is a really kind of valuable use case. But is there any that you've seen internally that has yet to kind of receive that level of attention but you think is a real kind of big opportunity?
Yeah. So I would say the one stablecoin use case that I'm probably most excited about, if I'm being honest, is the use case of, I don't know what exactly people call this or the right way to phrase it, but like corporate treasury management and liquidity management, particularly in the non-bank financial institution space and large multinational enterprise space. A lot of people, as you mentioned, are focused on stable coins, of course, in everything and anything to do with crypto trading and all of that around DeFi. I think the one that's been in the news mostly is around cross-border payments. So kind of using stable coins to solve issues on specific point-to-point corridors, whether it's on-ramping and sending and off-ramping or both. I think what not as many people are talking about is how large corporates, and particularly those that are in the financial services space or money movement space across a number of currencies and geographies, can use stable coins to just make their businesses order of magnitude more efficient, whether from a transaction cost perspective, whether from a foreign exchange perspective, whether from a cost of capital perspective. And so there are a number of companies popping up with this concept of like a quote unquote stablecoin wallet, but really for corporates and large institutions. I think that space is going to be really, really interesting. And then if you just talk about the scale of some of these companies, where even if they can more efficiently manage 5, 10% of their treasury or the liquidity and money movement using stablecoins in the middle or a stablecoin wallet, that's tremendous in terms of balances and volumes.
Yeah, I mean, you know, even outside of like the big multinationals, I'm thinking of like a Coca-Cola. I can't think of a country that won't have Coca-Cola, right? Like, and so like kind of reconcile like the internal kind of
Yeah.
financial flows, the efficiency gains seem huge. I guess, we're kind of coming up to time, so maybe a couple more questions on the future prospects of things, right? From your perspective, as things continue to evolve and we're seeing so much of this integration between digital assets and traditional financial services, do you have a sense of who you think you guys will be partnering with even more over the next 5 years? Is it going to be more pure fintech players? Is it going to be pure digital asset platforms? Or do you have any sense of what the direction of travel looks like?
Yeah, I mean, the answer is probably both. As we've spoken about, we've got partnerships with Fireblocks, BVNK, Circle. We have other crypto partnerships as well, and more to come. I would say, though, just given the scope and breadth of our business, We're probably likely to do more what I would call pure play fintech partnerships, whether it's new alternative payment methods, whether it's new fraud and risk management providers, whether it's new embedded finance providers. I think just the breadth of our portfolio is so big outside of the crypto and digital asset space that just by the law of large numbers and math, we'll end up doing more partnerships there. So I think answers both, but probably skew more towards the traditional fintech partnerships, at least for the next few years. As there's just a broader set of things to do there.
Got you. Worldpay, a huge merchant in the payment space, like incredible footprint and scale. And based on what you've been seeing, right? Like if you were to kind of launch a new payment company from scratch today, what's a thing or an approach you'd borrow from like the digital asset playbook?
I would say two things. So one is I think a lot of the digital asset companies do a really good job with customer communication and transparency. Like, when Coinbase had their issue, the theft issue a couple months ago, I just thought like what they did, what their CEO did in terms of the communication and turning the ransom and bounty on its head was just like amazing, like so creative and so transparent. And I think a lot of these companies, the founders, the leaders, the whole comm strategy is just around timeliness of information, transparency with your customer base. I just think it builds so much goodwill and so much customer loyalty. So I would definitely see if I could learn something from that if I was starting my own company. And then second is I think you can't always do this one depending on the industry you're in and who your audience is and all that. But I think generally speaking, the crypto space does a really good job of iterating quickly from a product and technology standpoint. Like they don't worry too much about getting things absolutely perfect because they know that they're charting new land or new territory, so to speak. They're constantly building new products, they're in a new industry. And so there's less obsession around like getting things perfect first time. And it's more about like, hey, let's test the waters with this new product or service or subscription or whatever. And then they just iterate and iterate and iterate. And I think that mindset of like quick iteration, stop letting perfect get in the way of the good is something they do really well. So those are two things that I would try to pick up if I was starting my own company from scratch, having watched the industry evolve over the last several years.
Yeah, I love that. I think the transparency piece is something that brands across the board can always learn from. I think, especially I think for consumers, right, there is a difference in terms of feeling like you're part of the journey and you're kind of an adult and it's okay to get the information even if it's not always what the company would have expected. I.e., I thought the example of brand
Yeah.
was a great one, right? Like things
There's
like
so
that.
much, there's so many studies that have just overwhelmingly shown that more information and more frequent information is just orders of magnitude better than no information or obscure or obtuse information from a
Mhm.
customer service and customer loyalty perspective. So yeah, sometimes when you've been doing that as a company, the opposite of transparency or opposite of timely communication can be hard to adjust. It's just such a big cultural change. But I think if you're starting from scratch, there's no reason not to be that way in today's day and age. And I think like with social media and the internet, and like you can't hide anything anymore, right? Like it's gonna get out there. And if it's gonna get out there, it might as well get out there from you so you can control the narrative.
Yeah, I mean, I think that's so true. I think we saw, over the last few years, I think we've seen the impact of social media when it comes to financial services, right? Everything from
Yeah.
what happened with GameStop to some of the kind of
Yeah.
earlier failures with some other of the kind of very crypto native players. And I think transparent and timely communication is probably one of the best antidotes for that. Well, Nabil, it's been a real pleasure having this conversation with you. We're really excited to see what WorldPay is doing. As I said, it took about a month for my LinkedIn to clear up from that WorldPay BVNK announcement, but I think even now I'm still getting some semblances. So congrats on that huge moment, and
Thank you.
hopefully we're gonna have folks who are listening will have an opportunity to interact with WorldPay at Money 2020 USA coming up in October, where we'll be talking more about the intersection of digital assets and TradFi.
Yeah. Well, first of all, again, thanks for having me. Really enjoyed the conversation. Yeah, looking forward to hopefully seeing you in Vegas. Should be a fun conference.
It's going to be great. Well, thank you, Nabil. Enjoy the rest of your day in London, and I will enjoy the rest of the day in New York. I'm enjoying this location swap between us.
Thank you.